Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Chris Englebert. He's the Managing Director at Beirne Wealth Management. He's here for the monthly Registered Investment Advisor update. Chris, as always, thanks for joining us at MarketSite. We have 3 segments, and I really love the first one, how to be a good client.
Yes. A lot of clients or people, when they want to become clients for a firm such as ours, they don't really know what questions to ask. They don't, they have kind of a vague notion. I'd like to make more money. I'd like to have my account managed. But what they really need to do is they really need to have a definitive outline as far as what they're trying to do as far in life. Is this retirement money? Am I trying to accumulate funds for college? They really need to ask themselves some of the questions to help us make better decisions for them.
I also think they have to understand the difference between a broker and what an RIA does, because that's a really important distinction.
Yeah, very. Obviously, the number one story of the last 10 years has been the acceleration of the RIA, or Registered Investment Advisor. At our shop, we are a registered investment advisory firm, so we are a fiduciary with the client. We're looking out for their best interests all the time. We're not pushing any product. We're not transaction-oriented. We're not commission-oriented. We're fee-based. One of the things that we think is very important to do for clients is that everybody that becomes a client at our shop is we do a strategic write-up. What are you trying to do? Where's your money now? If they have something that's good, fine, let's leave it. But if there's some changes that need to be done, obviously that's what we're here to help direct them for.
Well, here's an interesting question. When do you fire a client?
Yeah, it's not unusual. They've got to understand, clients have to understand that we're running a business just like everybody else. And unfortunately, sometimes clients really don't fit the mold, or there's not a good match. One of the things that we look for is clients that use other professional advisors. For example, if a client has a CPA or an attorney that they rely on, they tend to be a good client. Unfortunately, what ends up happening sometimes is that clients start out, they listen to you, they want to do what you tell them to do, but somewhere along the way, communication begins to break down. They may take an inordinate amount of time as far as your staff goes, with a lot of requests that really aren't that important. Obviously, everybody is important and their money is important, but sometimes they just get a little bit out of control.
Well, people get that mentality, I'm paying you. But,
Correct.
you also have to respect the business model as well. Let's move along to the second theme for the monthly update. Working with outside investment firms. That's interesting. I never thought, you would think, like an advisor would think of working with another firm.
Absolutely, Jill. What ends up happening is that many of the major investment firms, for example, JP Morgan, Goldman Sachs, First Trust, they have dedicated RIA channels. It's something they kind of discovered about 6-7 years ago, that there's this whole group of RIAs out there that are not being serviced. And so what ends up happening is that they have a lot of time and talent that they help to commit to the RIA so that we can do our job better. For example, I just had a call with a PM from Goldman Sachs on global equity markets. Gave me a very good outline, something I can take back and share with my clients. I had another call last week on interest rates from another PM at a large custodial firm. So these people really can provide some valuable resources for RIAs to use, and really an RIA has to understand that they're the kind of companies they want to help.
Right. Well, it also allows registered investment advisors to leverage all of the assets that these big firms have.
Correct, yeah, and they do a lot of things. For example, they have investment symposiums. I usually attend 3 to 4 a year. You get to hear their broad market outlook. There's been some amazing presentations on some of the sub-markets, and they really can drill down and help you understand what's going on in the energy market, what's going on in interest rates, et cetera.
Well, it makes total sense to get exposure to well-known firms like the Goldmans and the JP Morgans of the world. Why wouldn't you take advantage of that, right?
Yeah, and they just help to leverage your time, and it's really a valuable resource. So you're hearing from a lot of the major firms, a lot of their thinking obviously is very first class. It's very enjoyable to work with them. They give you a lot of good information. They're a very good resource.
All right, let's wrap it up and take a look at some of the charts. It's been a pretty interesting quarter for trading. Today's the last day of the quarter, last day for the first half of 2018. I can't believe we're saying that, but we'll take a look at the S&P 500. What are the charts telling you?
Well, it looks like that we've attempted in the last about 8 weeks to make another run at highs. We kind of failed. We've sold off this week. Really, we're in a trading range as far as the S&P 500 goes. One of the areas that's been under fire so far has been the financial sector. They were supposed to lead the S&P higher, and they really haven't. Obviously, the stress tests came out yesterday, and a lot of the banks did very well with those. But it's interesting to note that we're really in a trading range on the S&P 500.
All right, and we'll take a look at the Nasdaq comp. Continue to break new highs this month.
Yeah, broke out to new highs. The bulls will say that this is a pullback within an uptrend. Certainly looks like that. A lot of money has been chasing the large cap tech trade. The question is whether or not is this sustainable, and that's what we're looking for in the charts again.
All right, and Russell 2000, that's another good-looking chart that continues to hit new highs.
Yeah, the bulls again say that the markets are broadening out. The fact that the Russell 2000 participated has been very interesting, and probably the biggest surprise so far this year for a lot of market pundits. A lot of people didn't think small cap was going to do quite that well. They were talking about the fact that tax cuts would help them. It seems that it has, and so the Russell 2000 has come on very strong.
6 months tax cuts as well, right? So we're seeing that play out in the market. And we'll take a look at the 10-year Treasury. Would you say it's a flight to safety for the summer?
It looks that way. Very interesting. I talked about in our last segment, I had a major fixed income PM in the other day, and we were talking about interest rates, and they believe, like we do, that you probably have seen the highs on the 10-year for the year, and it looks like it's working its way a little bit lower. If we would have some kind of slowdown the rest of the year, maybe it dips below 2.5%. But again, it almost looks like it's in a trading range as well.
All right, let's wrap it up with crude oil. Hit multi-year highs this week.
Yeah, big surprise. We've been big energy bulls for the last 2 years. Crude was a big surprise last year. The trade continues. It took a real good breather, a pretty good pullback. And again, the big surprise has been how strong it's been literally in the last 2 weeks.
All right. Well, great to see you as always. We'll be kicking off the second half of the year.
Second half.
Few couple of weeks when we have you back for the monthly update. Thank you very much as always for joining me, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.